This is Robert Harper at Virginia Farm Bureau Grain Division. Thankful today, glad to bring you another Merchandiser Minute. It's May the 29th, 2026. Let's take a look at how the futures markets closed out in Chicago this week. July corn down 17 cents for the week to close at 446. December corn, your new crop contract, down 11 cents this week to close at 475. Over on the soybean side of things, the old crop contract, July beans down 10 cents for the week to close at 11.86. And your November contract, your new crop soybean contract, up 3 cents for the week to close at 11.90. Looking at the Chicago soft wheat futures, a lot of damage done here on the futures chart this week, down 36 cents for the week. July Chicago wheat to close out at 6.10 a bushel. September contract also trading even. The spreads there down 36 cents a bushel as well to close at $6.23 a bushel. A few interesting things. Remember, the World Ag Supply and Demand Board, the way they keep track of production records on a marketing year. Today is the last day of the wheat marketing year. It runs June 1st through May the 31st. So just kind of a happy birthday to a new marketing year for wheat that will start on Monday. Just a few things to remember. Remember, there are 5 wheat harvests roughly around the world. The world doesn't have to wait long for a wheat crop if there's a problem somewhere. The United States, we're in the mid 40 million acre range on wheat acres when you consider winter planted and spring planted acres over the 5 classes of wheat. We did see a nice sale this week to South Korea. But again, at the end of the month here and at the end of the marketing year for wheat, just a big down week this week with the speculators now being on the short side again on that commitment as traders report. A lot of damage done this week as well on the corn futures. We know if you take the old crop contract, we'd gotten up to 480. We had gotten above $5 on the D's futures, but with news this week from President Trump and all the goings on in Iran that we've been paying attention to, it looks like the U.S. and Iran, it's a lot of back and forth, have reached a tentative agreement to extend the ceasefire another 60 days and to keep the Strait of Hormuz somewhat open. But President Trump has not approved that at this recording yet here this afternoon. So just a lot of mixed signals back and forth. But, you know, when you take war premium out, we see these speculators in the recent past, take money out of some ag commodities. If you look at what else went around on the outside markets this week, not counting news out about increased inflation here in the United States, but if we just look at the outside market, the equities were up this week. We know the Dow Jones Futures Index, who did, I believe, celebrate a birthday this week, that futures index is trading steadily above 50,000, not at the all-time highs, but close, a psychological number anyhow on that index. But we did see the S&P go to new all-time highs this week on that futures index. The dollar was lower for the week. We know that's good for U.S. ag exports. And wow, what a big sell-off in crude oil futures. I think at one point on Wednesday, they were down $6 a barrel on back and forth news about a potential ceasefire or peace deal. So hopefully you'll see that at the pump soon, at least a slight tick back in spot buying gasoline or diesel fuel on or off-road diesel at the pump. But crude oil futures down for the week. Ag commodities, as we're looking at here on the old crop side, corn, wheat, and Chicago wheat and beans down for the week. And just noticing too, remember, November beans were up. The new contract up 3 cents for the week. Old crop down 10 cents on beans. And that's just a great indication of the fundamentals are so different between the old crop futures contract and the new crop contract. Big news around the Commonwealth this week. Everyone is so thankful for rain. As y'all know, it's been as varied, but I've heard anywhere from a ½ inch over 6 days of cloudy weather and rain to 5 inches of rain over that time period. But we know it's made a positive difference on pastures, on hayland, on getting these crops established that you've all planted, the corn and bean crop that's been waiting. We did get out this week. A big thanks to 10 cooperating Farm Bureau members for helping us host a Virginia leg of the Mid-Atlantic Wheat Tour this week. We'll have those numbers next week. It is a significant decline in yield on the state's wheat crop this year, as you all know, due to drought and due to frost and freeze damage from that frost on April 20th and 21. But we really appreciated looking at the wheat this year, and all the folks who came out to the Eastern Virginia Ag Research and Extension Center, to those folks there, the staff there, Dr. Oakes and his team, as well as the folks with Cooperative Extension that helped put this tour on. It's great to collaborate with them, and those numbers are coming. But we were thankful to have mud on our shoes walking through looking at the wheat. U.S. Trade Representatives Office and the Mexican Trade Representative Office have been meeting bilaterally to discuss the U.S.-Mexico-Canada agreement. More meetings in June. We also know, we're watching next week, that the U.S. Trade Representative, USTR, will be in India to finalize an interim trade agreement. That's interesting to me, an interim agreement they're finalizing. Some fundamental numbers. We remember Argentina, they plant corn first for the most part and double crop beans behind it. Their soybean harvest, we saw numbers this week around 85% complete. And a lot of those acres get another crop. They get wheat sown behind those bean acres. So watch that. Remember, we are in a weather market. It's just not as much North American weather as it is South American weather. It just depends on what time of year it is. And we know right now we've got South American weather that's being impacted on their wheat crop, especially Argentina. They export a lot of wheat, and we know North American weather market is very important right now because of planting. And speaking of that, this week, because of the holiday, Memorial Day holiday on Monday, our planting progress numbers came out on Tuesday. U.S. corn acreage at 86% planted, 83% is the 5-year average, so they're getting it done. You all are out there. Beans at 79% planted, 68% is the 5-year average. So we're well ahead on both, and we know when we're ahead of the planting pace, that takes some wind out of the sails of the futures markets, just like we saw wind come out of the sails of the futures market this week with talk of a peace agreement in the Persian Gulf and with Iran, and we saw that money leave and go into the equities markets. Y'all are getting used to that. Ethanol this week, the EIA report, production down 2%, just over 1 million barrels of production a day. Stocks just slightly higher, 0.4% higher than a week ago, 24.9 million barrels. Lots of news about torrential rains across some production regions in China, and really not much information, if any, that I can find about crop damage. So we'll be looking for that next week. Just a little side note, remember the February crop insurance price for your corn, your spring price, December corn futures, $4.61. Our broker, Farm Bureau's broker, your broker this week, looked at really many years and how we have traded around the February crop insurance price. 90 to 110% is usually the range from May to August. So what does that mean? That's $4.15 a bushel to $5.07 a bushel. But one of the important things that he told us this week is that almost always the December futures will trade to where the spring crop price was set. So we know today, we've been over that. Dece corn closed at $4.75 today. The spring crop price is $4.61. So more than likely it'll trade down to that $4.61 level, but our range could be as low as $4.15 to $5.07, depending on fundamental things about U.S. acres, weather, exports, etc., and geopolitics. So we'll watch that for next week. Commitment of traders last week, still a big long position for the corn speculator, 293,000 futures contracts. The bean speculator long 207,000 futures contracts, and the Chicago wheat speculator short 4,000 contracts. So we'll get a new commitment of traders report this week. Let Josie or I know if we can help you after this rain. There's time for good conversations now about where you're at forward contracted on new crop bushels of corn and beans. And if you've got old crop to clean up, there are some special basis offers around the countryside, not only on beans, but on corn also. I appreciate all you do. Thanks for joining me today. This is Robert at Virginia Farm Bureau's Grain Division.